Robinhood stock just finished one of its more dramatic midweek sessions, closing down by 5.4% at $102.92 per share. That's a nearly $6 decline in a single day, snapping some of the recent momentum and leaving investors asking, what's going on with Hood? Now, while a pullback like this always raises eyebrows, the context is important. Robinhood's share price is still more than double where it began the year, the fundamentals remain strong, and the long-term growth story hasn't changed. So let's unpack what's behind this latest dip, and why there are still plenty of reasons to remain optimistic if you're a long-term believer in Robinhood's transformation. The headline that dominated Wednesday's move was the S&P 500 rebalance. Many traders had speculated that Robinhood might finally get added to the index after meeting profitability, scale, and liquidity requirements. Instead, the S&P committee chose Interactive Brokers. For Robinhood, that meant missing out on the automatic inflows from index funds and ETFs that track the benchmark. The disappointment was immediate, and the stock sold off. But let's put that in perspective. Not being added this quarter doesn't mean Robinhood won't make it into the S&P 500. In fact, with its market cap above $80 billion, consistent profitability, and rapidly growing revenue base, Robinhood remains a prime candidate for future inclusion. Timing is always uncertain with index committees, but the fundamentals that make Robinhood eligible aren't going away. If anything, the company is getting stronger quarter by quarter. The second issue weighing on the stock is concern about profitability and trading volumes, especially in crypto. While Robinhood's second quarter results showed nearly $1 billion in revenue and 42 cents in earnings per share, some analysts noted that crypto volumes appeared to be cooling compared to the massive growth we saw earlier in the year. Because crypto trading revenue nearly doubled year over year, any hint of a slowdown naturally gets magnified. But here's the other side of that coin. Crypto markets move in cycles, and what we've seen over the past month is more consolidation than collapse. Bitcoin and Ethereum are still holding strong levels compared to 2023 and 2024 lows. Robinhood has also diversified beyond just crypto spot trading. With the Bitstamp acquisition, staking features, tokenized stock products in Europe, and futures offerings, Robinhood is building a multi-pronged crypto and blockchain strategy that isn't dependent on daily Bitcoin volume alone. So even if trading slows temporarily, the growth runway is intact. Third, analyst sentiment has been mixed. On one hand, we've seen firms like Cantor Fitzgerald and Needham issue very bullish price targets, some as high as $130 per share. On the other hand, the broader analyst consensus averages closer to $97, which is below the current share price. That divergence creates noise and uncertainty. But again, this is where investor perspective matters. Analysts who are bearish tend to focus on traditional valuation models and the risks of declining net interest revenue if the Fed cuts rates. Analysts who are bullish focus on Robinhood's innovation pipeline, user growth, and the massive potential of tokenization and crypto integration. If you believe Robinhood is not just a US brokerage but a global fintech platform in the making, then the upside case remains compelling. Now, let's zoom out and think about what all this really means. Wednesday's drop was largely about expectations for index inclusion, expectations for non-stop crypto growth, expectations for analyst upgrades. When those expectations weren't met in the short term, the stock corrected. But corrections are normal in a stock that's already rallied more than 150% year to date. More importantly, the long-term picture hasn't changed. Robinhood still has 26.5 million funded accounts. Assets under custody stand at $279 billion. Average revenue per user is climbing, now at $151. Those metrics show not only scale, but deepening engagement. Users are not just signing up, they're actively trading, investing, and contributing to higher per-user revenue. The product roadmap is equally exciting. Tokenized stocks and ETFs in Europe are just the beginning of a potential 24/7 global trading model. The Bitstamp acquisition gives Robinhood a footprint in international crypto markets and regulatory licenses across key jurisdictions. Staking and futures products diversify the revenue base. And while US regulators are still working out frameworks for tokenization, Robinhood is positioning itself as a first mover. There's also the valuation argument. Yes, Robinhood has a forward price-to-earnings ratio above 40, which might look expensive on the surface. But growth stocks that are innovating at this scale often trade at premiums. If Robinhood continues to deliver 40+% revenue growth as it did in Q2, that valuation can be justified. And if the company makes it into the S&P 500 in a future rebalance, the influx of passive inflows will provide a powerful base of support. So how should investors think about Wednesday's decline? First, it's a reminder that no rally is a straight line. Even the strongest growth stories experience volatility. Second, it underscores the importance of focusing on fundamentals rather than short-term headlines. Missing S&P 500 inclusion this quarter stings, but it doesn't alter the core thesis. And third, it highlights the opportunities that come with volatility. For investors who believe in Robinhood's long-term story, pullbacks like this can create entry points rather than exit signals. Looking ahead, the catalysts remain clear. Continued growth in crypto adoption and trading activity, especially if the Fed does cut rates and risk assets rally, will benefit Robinhood directly. Expansion of tokenized products and blockchain integration could open entirely new markets. And growing analyst recognition of Robinhood's transformation from meme era app to global fintech player could help shift the consensus targets upward. There are risks, of course. Regulatory scrutiny on tokenization remains a wild card. Crypto revenues are volatile by nature. And competition from legacy brokers and new fintech entrants is intense. But Robinhood has consistently shown that it can innovate faster, capture retail engagement more effectively, and scale profitably. That's a powerful combination. So while the stock may have closed Wednesday at $102 and change, down more than 5%, the real story is not about one day's move. The real story is about a company redefining what a trading platform can be, steadily expanding its user base, diversifying its revenue, and positioning itself at the forefront of fintech innovation. Investors who focus only on the daily chart might see volatility and uncertainty. But those who zoom out see a company with a growing user base, a clear vision, and the potential to reshape both traditional and digital finance. And that's why, even after a rough midweek session, the bullish case for Robinhood remains very much alive.